All right, let's talk about Beyond Meat. This company was supposed to change how we eat, right? But now it looks like it's on the verge of total collapse. Or is it? Because what's really happening behind the scenes is this incredible high-stakes fight for survival. So let's dig in.
Okay, just look at this number, 98 cents. That's it. That's what a share of Beyond Meat was worth just the other day. And remember, this isn't some tiny, unheard-of company. This was a Wall Street darling. This was supposed to be the future of food.
You know, when you see a stock absolutely crater like that, we're talking losing more than 90% of its value, and it's trading for less than $1, well, the writing seems to be on the wall, right? For pretty much everyone looking at this, it screams one thing: game over.
But what if that's not the whole picture? What if there's a secret battle plan happening right now, something the market is completely overlooking? That's the real mystery we're going to unravel here.
Okay, so first, let's get into the story that everyone thinks is happening. You know, the classic tale of a shooting star that just burned out.
And look, the argument that they're doomed, it's pretty strong. I mean, think about it. You're at the grocery store, prices are through the roof. Are you really going to pay extra for a plant-based burger? It's a tough sell. And then you throw in a ton of competition and see their main U.S. sales drop by 18%. Yeah, you can see why everyone's so pessimistic.
And then you see a number like this: $77 million. That's how much they had to write off in just one quarter. Basically, they built all this capacity, these huge factories, expecting a massive wave of customers, and that wave just never came. Now, it's a non-cash charge, a paper loss, but it's a huge part of why their official reports look so bad. Okay, but here's where things get interesting. While everyone is focused on that doom and gloom story, the company itself is in the middle of a massive, radical plan. This isn't them throwing in the towel. No way. This is a calculated, strategic fight to stay alive.
The official name for what they're doing is a total balance sheet reconstruction. Sounds complicated, right? But forget the fancy finance talk. The goal is dead simple: buy themselves more time. That's it. They're scrambling, talking to lenders, redoing all their finances, anything to survive and fight another day.
So what's in this survival playbook? Well, step 1, keep the lenders happy. That's priority number 1. Step 2, get creative with their debt. They're actually using a special kind of note that lets them pay the interest they owe with more debt instead of precious cash. It's super risky, but it keeps cash in the bank. And third, they're getting smaller to get stronger. That means pulling out of China, dropping stores that are losing money. It's all about one thing and one thing only: stop the bleeding, and stop it now. And this is where we get to the real fight. Forget what's happening in the supermarket freezer aisle. The real battleground, it's right there in the financial reports. And those numbers, they tell a fascinating story of struggle, yeah, but also some surprising signs of life. So check this out. This chart highlights their single biggest problem. It's called gross margin. All that means is the profit they make on every single burger they sell. Beyond Meat's is just 10%. That's razor thin. A healthy company in this space needs to be up around 30, even 40%. Closing that gap isn't just important, it's everything. It is literally the difference between survival and bankruptcy.
But here's a twist in the plot. While their business here in the US is taking a nosedive, there's actually a little glimmer of hope. Their international business, partnerships with food service companies abroad, that's actually growing. It's not some massive explosion, but it's proof that people out there still want their product. The demand hasn't completely disappeared.
So all this brings up a really important question, doesn't it? If this company is just a sinking ship, then why are some of the biggest financial giants on the planet still holding on to their shares?
I mean, look at this. You've got massive players like Vanguard and BlackRock still holding big chunks of the company. Now, let's be real. A lot of that is just because the stock is in index funds they manage. It's passive. But still, it tells you something. They haven't been scared off completely. It suggests that even they think there's some tiny, narrow path to survival here.
And this quote really sums up the whole situation perfectly. You've got this massive tension. On one side, you have the shorts, investors who are betting billions that the company will fail. And on the other side, you have the company itself, fighting tooth and nail to restructure and stay alive. It's a classic Wall Street tug-of-war, and it's happening right now.
So where do we go from here? What are the make or break moments that are going to decide if this is a total collapse or the beginning of a wild comeback story? Okay, the clock is ticking and there are some huge deadlines coming up. First, we've got the March earnings report. That's the first big test.
We'll see if they've actually managed to improve those margins we talked about. Then, by the end of 2026, management has promised they'll be profitable, at least on an operating basis. And the big one, the final boss, is 2030. That's when all their debt is due. They have to have this figured out by that.
So really, what this all boils down to is this. The stock has basically become a call option, a lottery ticket. It's a pure bet on whether this turnaround will work. If they actually pull this off, the upside from under $1 could be absolutely massive. But if they fail, the stock is going to zero. There's no middle ground. It's all or nothing.
And so that leaves us with the final $1 million or maybe 98-cent question. Is this stock right now a historic bargain just waiting to be discovered? Or is it just the final flashing red light before the whole thing goes dark for good?